Okay, welcome back. You're with us here on Closing Bell. 10,440. We're not quite at the day's high, but about 10, 12 points off. That's it. I think we've got more numbers which are trickling in, and we should be, I think, getting numbers from Tech Mahindra. Yeah, there you go on your screen. Net profit at 836 crores compared to a profit of 740 crores. That seems to be, I mean, significantly higher, significantly better, 100 crores better than what was being expected. The stock is spiking, up 3%. We have revenues, rupee revenues at 7,606 crores, and that is better by about 50 odd crores or so.
Dollar revenues up 3.6% quarter on quarter, and that's slightly higher than the poll that threw up a number of 3%. So what they've done on dollar revenue is 1179, and as per their own calculations, I mean, I'm going by the company's release, they're saying 3.6% higher. EBIT margin up 180 basis points quarter on quarter. Let me get the margin number. I don't have the exact EBIT number right now. But those are the first big numbers to focus on, and the stock seems to be liking them.
The big one is the dollar revenue, sort of be 3.6 compared to 3, and I mean that is something I think which the market will like. I don't know how much was being priced in, but this seems good. Anisha is here with more details. Anisha.
Well, Prashant, yes, given the top 4 companies, the highest rate that we had seen of dollar growth was 3.2%. 3.6% would go down well, given our expectation also is around 3%. As you mentioned, even the EBITDA margin, if it has increased by 100 basis point quarter on quarter, that should go down well, because remember, margin was a real pain point for the company, and they had been saying that they're looking to improve the margin, but we had not seen that happening in the last couple of quarters. So the margin really plays an important part. As you mentioned, other than that, rupee revenue growth has come in line with expectations. I'm just trying to open up the release to see if we have the constant currency and other details. But as of now, what I see on the screen, I don't see there's any positive, or I'm sorry, any negative as far as this result is concerned. We'll have to wait back and see if the EBIT number is out. I don't see that yet, but the net profit number is quite healthy, and I think this is, you can say, in terms of dollar revenue, this is one of the best performances that has happened in terms of the top 4-5 companies that we have got the numbers for. So if we have the EBIT number, we can move forward. I mean, in the meanwhile, I'm trying to find more details from the press release in case you guys have been able to open the press release.
Yeah, but I don't have a specific EBIT number. I mean, if you're going by what the company is saying, I mean, they've given an EBITDA number, but I don't have an EBIT for you. So EBITDA, if you're talking in dollar terms, is sequential growth that's coming. And the dollar term EBITDA is about 171 million. But I'm looking for the EBIT number. That would be a more sort of likely comparison. Sarabjit or Nangra with us for the initial thoughts. Sarabjit, that dollar revenue number seems to be a good one. What else are you picking up from the earnings so far?
Actually, if you can briefly tell me, I've not seen the numbers totally in totality right now. I don't have the numbers with me.
So I can tell you the dollar revenue number 1179, which is a 3.6% sequential growth. If you're looking at EBITDA again in dollar terms, then the dollar EBITDA is 171 million for the quarter. That's the figure that we have to begin with.
So I think top line is slightly better than what I was expecting, and EBIT is, I think, more or less profitability is in line with expectations. So I guess top line better than expected, and margins in line. So somewhere I think either expenses have risen higher than but it's in dollar terms, so I will
no, but the rupee,
reserve my comments on what has driven that. But I think margins look more or less in line with expectations.
Sarabjit, I can tell you this. I mean, we haven't calculated the EBIT, but the EBITDA at the rupee level, the company is saying there's a 180 basis points quarter on quarter improvement. EBITDA is at 14.5%, but I don't have that EBIT number straight away to give you.
This is a rupee number.
This is a rupee number, yeah.
Then it's definitely much better than expected.
Okay, I have the EBIT number that the company has reported. They are saying it's 11% versus 9.4% that they reported last quarter, and that is the number that we really pick up, the calculated number from the management. So Sarabjit, the word on the number, 11% margin figure, how does that look, EBIT?
As I said, the numbers are good in the terms of top line. So if it's reflected in terms of margins also, then I guess it is a clear performance of top line driving the profitability much higher than we were expecting. So overall, good set of numbers actually.
Okay, we also have Prakash Diwan for a quick reaction. So the Prakash, the EBIT number, as Anisha pointed out, 11% compared to where they were last quarter, 9.4%. Dollar revenue 3.6% higher. Looking good?
Oh, absolutely. 840 crores is what I thought I read somewhere as the EBIT number. And that definitely seems to be much better than what, most IT companies in this segment have been reporting. So the street will like it. What happens with these kind of numbers is that, people like to put attributes to whether this is a likely continuation in the next quarter, next couple of quarters. And if you have doubled, 20 plus kind of EBIT percentages, people will want to kind of, see if this continues, and you need to re-rate the stock. So it's already up, 1.5%. I don't know what is it now, but I think the street will like these numbers because there's not much of expectation when we were going into numbers here. And it's definitely much better than most of the top-rank IT companies.
I can share some more details, Sarabjit,
Sure.
with you. So it's interesting, the number of active clients has gone up from 864 to 885. Now these clients aren't coming in the big bulge bracket categories. There's nothing changed on the 50 million side or the 20 million side. Where they're adding clients is the 10 million category. That's where the kicker seems to be coming in, and maybe that's where the additional revenue numbers are also coming in. And let's see what else we can pick up.
Well, I'm just picking a couple of information, Sarabjit, for you. So the communication contribution has come down to 43% versus 45% that was their last quarter. And it seems that the other business of the company has grown because now the revenue contribution stands at around 9.9%. So Sarabjit, a word on this in terms of the internals. What were you expecting from the telecommunication business, which of course remains the mainstay, and the enterprise vertical? And also, what do you see the stock in terms of estimates, moving your estimates for the stock now?
In terms of communication, definitely the company was earlier much dependent on communication. Now with acquisitions and integration of these acquisitions, the dependence is reducing. Now the dependence of other domains are increasing. So it's not surprising that it's reflected in the numbers that its growth is driven by other domains apart from communication. As far as the stock is concerned, we definitely will have to upgrade the numbers because margin lever is something which we were expecting, because this is one company which is having subdued margins in spite of the size and scale because of its acquisition. So probably now, since they deliver a good set, I think that will go for a revision. So definitely, the stock currently for me is an accumulate, but I think with the numbers probably can move towards a buy zone. And the only issue with the stock is that it is still on EV to sales basis, it's still attractive. So it's a story on margin. So the day margin starts improving significantly from these levels, because they will improve eventually, that is a time you can. So any long-term investor looking at the stock is surely buy. From a 1 year's perspective, probably it is more from accumulate to buy zone, actually.
Thanks very much, Sarabjit. Prakash, appreciate both of you joining in with the first comments on Tech Mahindra. Stocks come off. I mean, basically, I'm looking at the year-to-date performance. It's down 1%. I mean, a grand total of 1%. It's had a poor 2016. It's had a poor 2015. But I don't think we can say very much differently for other IT companies as well. Here, margins seem to be a lot better. We'll get back to that in a bit. But there's